Disclaimer: all my videos are for educational purposes only. I am teaching and explaining investment trading to everyone, but I am not giving out any advice. All investments are subject to market risks, so please evaluate carefully before you invest, as you may lose your investment. Hey guys, I'm Rachin. I am starting a YouTube channel explaining investment trading to everyone. The reason why I thought of starting this is because during the pandemic, a lot of people have lost their jobs and their primary source of income. And now people are challenged to find other sources of income to supplement their daily job. So I thought it might be a good opportunity to explain to everyone this amazing world of investment trading so that everyone has other streams of income to supplement their daily job. So in this video, what I'm going to be doing is I'm going to explain the 5 types of classification of investment trading and a bit of history about all of them. So the 5 different types of classification of investments are stocks, bonds, real estate, commodities, and currency. So let's give a brief overview of the history of stocks. So in 1611, the Dutch East Indian Company successfully established the world's first ever stock exchange known as the Amsterdam Stock Exchange. There, they became the first publicly trading company where they would sell their shares to the general public. But at that time, there was no established protocol on how to buy and sell shares. So, in the late 1700s, a group of merchants banded together to form something called the Buttonwood Tree Agreement, in which they decided that they would meet daily and buy and sell shares based on the price at that day decided by a community. And this practice was later on adopted by the New York Stock Exchange as well. So going back to the history of bonds, the first bond ever made dates back to around 2400 BC, where it would guarantee payment of crops by a principal. It was basically like a surety bond where it would guarantee the lender reimbursement of his investment if the principal failed to make payments. At that time, loans were generally covered using cattle or grains at that time because it used to be the primary form of currency. But then, when silver was discovered, it quickly became popular as it was a non perishable item. And that practice of using commodities for backing any bonds still exists now and is used in almost all bonds issued by governments. They hold around 2 or 3 extended families, and they would all live on a land where one person would claim ownership to that. So, normally, the people, in exchange for their security, would pay homage to that lord or king who would claim ownership of that land, in exchange for their security to drive away any desperate invaders. This practice started the first ever concept of rent or of paying tenancy fees. This system of labor for protection led into 2 different classes: taxes and tenancy. The heads of villages started giving titles and deeds to their family members so that they could have ownership of parts of land underneath an entire area. This led to the development of this modern real estate investing. Then, when precious metals were first discovered, like gold and silver, and even base metals like copper and iron, then people started making coins from them and used that as currency, thereby splitting into currency and commodities. Commodities still remained as cattle, milk, grains, whereas currency started to become those coins of the base and the precious metals. Then, when we started to develop paper notes, like our physical paper notes existing today, then these precious metals and base metals shifted back into the commodities market. Now, the commodities market is a hotly anticipated exchange where things varied from cattle, like pork bellies, to base metals and precious metals like gold, silver, iron, copper, to natural gas and coal, as well as one of the most hotly traded futures on this commodities exchange is surprisingly orange juice. It's a very weird fact, but a lot of people trade futures of orange juice on this commodities exchange. So, the last one on our list, currencies. As you may well know, currencies did not come into existence after quite a long time because earlier we had the barter system. The currencies started to come around the 7th century, but it took a long time before different currencies started to come all around the world and foreign exchanges to take place. The first ever recorded version of this is that during the 15th century, an Italian family started the world's first ever foreign exchange banking to facilitate the exchange of these currencies on behalf of textile merchants. In the modern times, a group called Alex Brown and Sons started trading foreign currencies in the 1850 and quickly became one of the leading currency traders in the whole of the United States. But around the end of 1915, half of the world's foreign currencies started to be exchanged and conducted using the pound sterling, as the United Kingdom had a lot of influence all around the world. This practice is still used even now in some parts of the world. So guys, this is where I take your leave. I really hope you enjoyed this video, and I hope you got to learn a little bit about the 5 different classes of investments and a brief history about all of them. In my next video, I'm going to be going into much more depth about all of these classes and explaining them in much more detail. Thanks for watching, and I'll see you in the next video.